Should you invest in real estate in 2023? Should you invest in real estate in 2023? With all of this talk about a recession on the way, should you invest in real estate in 2023, guys? This is going to be some crazy times ahead. And on today's podcast, I want you to understand how to know when you should invest in real estate. By the end of this show, you're going to walk away knowing when it's a good and bad time to buy properties and what types of real estate investments you should avoid during a recession. All I need you to do is smash that like button. I want to give a big shout out to everybody who's booked a free session to a private call with yours truly, where we'll talk about insuring your way to wealth. How rich people use insurance to build a fortune. Guys, if you haven't gotten on this call yet, you need to do so ASAP. This is where I'm giving you a 1-hour free private consultation where I'll show you little known strategies that rich people use to build their wealth through insurance. So if you're ready to take control of your financial future, please click this link in the comments now to book your session below. For those of you guys that are on, please leave me a comment. Let me know that y'all are here. Give me a shout out. Let me know where you're from. Give me your name. Give me your city. Show me some love, y'all. Today we are going in. Please make sure, if you have not yet done so, make sure that you smash that like button. Like I just said, make sure that you subscribe. Make sure that you tell a friend. Tonight is going down. We're talking about, should you invest in real estate in 2023? And before we begin, I want to give a big shout out to my sponsors. Now, last show, we had a three-way tie on the official sponsor. Elder Yakin, Sister Chantel, and my sister A Diamond. I've got to give a big shout out to you, Sis A Diamond. I didn't even know that you made a donation because you sent it Cash App, and you're so humble about it because you stayed quiet. But I thank you. I love you, and I appreciate all of the support. And for those of you asking, well, what's a sponsor? A sponsor is someone who supports this broadcast. As you know, I put in a lot of work behind the scenes to give you as much value as possible. So when you sponsor this broadcast, it helps me to keep the show going. I'm a real estate investor, best-selling author, and church leader, and I really do my best, guys, to give you as much free content as I can. But I cannot do this show without your help. So if you find it in your heart, please take a moment to tap that dollar icon directly below the live chat box, so that way you can be a sponsor for tonight's show. And remember, whoever makes the highest donation will be the official sponsor for tonight's podcast. You guys could donate either on YouTube by doing a super chat, or you could donate through PayPal or Cash App. Cash App is $Gen Wealth Podcast. Let's get into tonight's topic. Should you invest in real estate in 2023? I want y'all to leave me a comment. Are you planning on investing in real estate? Are you not sure? Are you thinking, man, you know what? I want to buy me some property, but I don't know if I should. There's so much that's going on in the market. I don't know if I'll lose money. The best time to buy real estate is typically when prices are low. And y'all might have heard the quote, the best time to buy is when there's blood in the streets. I know y'all been hearing all about how crazy things are in the market. Gas prices going up. The cost of eggs is through the roof. You got to see where the market is going. And today I want to share with y'all this article on, will home prices drop in 2023? How many of y'all have been paying attention to the housing market over the past 2 years? How many of y'all have noticed that the cost of a home is absolutely ridiculous? If you're wondering, should you invest in real estate in 2023, it's important that you guys watch tonight's show because I'm going to be showing you guys when is a good time to buy. Now, as we can see in this article, I'm going to go ahead and zoom in, y'all. All right. Want to make sure you'll see everything that's on the screen. It says most research firms and investors are forecasting that home prices will drop in 2023. For instance, Goldman Sachs predicts that home prices will drop by 5 to 10% from their peak. Others, like Freddie Mac and Fannie Mae, are less pessimistic, projecting home prices to retrace by about 1% this year. The expected retraction follows an uninterrupted 10-year run of increasing prices of both new and existing homes. Now, for those of you that don't know, I'm a real estate investor here in the great state of Texas. I own over $1 million worth of real estate. So I can tell you from personal experience that what this article is saying about the past 10 years is true. I remember my first real estate investment was a duplex property in North Austin. When I bought that property, I paid $230,000. And even though my real estate agent told me that I was overbuying at the time, I was spending too much money, he was saying I was going in overpriced, I said, nah, I'm good with this because I think that this community is going somewhere. Can you believe that that same property 5 years later was almost 3 times the amount of what I bought? This is what I want y'all to notice about real estate. I'm sure you've heard the news. There's been more millionaires made through real estate than almost any other industry in the world. That's why we're talking about this on the Generational Wealth podcast. You know, one of the reasons why I personally love real estate as a form of creating generational wealth is, for one, it allows you to create passive income. Number two, it's an appreciating asset. But number three, when you talk about passing on a legacy, not only will my son be able to collect rental checks from tenants, he could also live in one of the properties himself. He won't have to worry about going out and finding a house. If he wants to stay in one of the properties, he could do it. So having real estate opens you up to a world of opportunity. You got to know one of the biggest forms of wealth is land. And that's one of the things that we're going to talk a lot about in 2023. But notice, Goldman Sachs predicts that home prices will drop by 5 to 10% from their peak. Y'all might want to stay on the lookout for that. I know a lot of y'all might want to get in the real estate game, but you say, man, everything is costing too much. I can't afford this. You might need to be on the lookout for that 5 to 10% drop if it happens, because that might be your golden ticket. It also talks about some other stuff. We're not going to go through the entire article. I'm not trying to put y'all to sleep, but I want you to notice this. What has been driving the home price growth in years past? I want y'all to look at this chart. This is how much the median home price is in America going all the way back to the 1950s up until today. Notice this. From 2010 up until today, housing prices has soared astronomically. So imagine if you owned real estate all the way back here. Now, a lot of y'all are familiar with the housing crisis that happened around the 2007, 2008 time period. That's where that big dip is coming in. But you notice the number stays pretty steady. You got ups and downs, valleys and peaks. And there was a very strong 10-year run in the real estate market. This is where we are at today. You notice there's a bit of a down dip right here. That's going into the decline in prices that took place last year, guys. I'm showing y'all accurate data. This is information in real time on what's happening in the market. Now, the question is, How low is this dip going to go? And one of the things that I want y'all to notice typically about investing, if you're looking into the real estate market or the stock market, these markets tend to grow over time. So don't think, oh man, it's going to go all the way to rock bottom. You've got to be able to find a good way to get in during a dip. And sometimes it's better for you to get in even if the market is going up than not at all. Because one thing that you need to know about investing is that you cannot time the market. You cannot predict what's going to happen on a specific day to make the market go one way or another. Okay. All this is one big guessing game. So I want to be able to show y'all right now that if you're thinking about investing in real estate in 2023, the market is going down. We don't know when it's going back up, but when it goes back up, who knows how much higher prices will get. Now, I want you to look at these numbers. It says in the last decade, the median home price in the United States nearly doubled from $222,000 to almost $400,000. Meanwhile, the price of new homes increased from $292,000 in 2012 to $543,600 in 2022. This is something that you should be thinking about as a real estate investor. If you're trying to get into the game, you might not want to buy a brand new home because it's going to be more expensive to get into. You want to make sure that if you are a first-time real estate investor, you're starting low and hedging your bets. The reason why you want to start low, guys, is because you don't want to make a lot of mistakes with a lot of money at stake, okay? When I bought my first real estate investment, I didn't know what to expect. I didn't know what tenants would be like, how often I would have to make repairs, and you don't want to make a lot of mistakes with a lot of zeros behind it. When you make your first real estate investment, you really just want to get started. And you want to go in with the mindset that you're going to continue to work your way up over time. This is not going to be one and done for the rest of your life, hopefully. Okay. Let me take a quick pause. Let me see where y'all at in these comments. If y'all are just getting on, make sure that you smash that like button. Tonight, we're talking about should you invest in real estate? Please make sure that you smash that like button. Please make sure that you donate to keep this show on air. All you got to do is tap that dollar icon directly below. Shabu TV asked, what's talked about in the free sessions? Yes, in the free sessions, this is where we talk about how the rich use insurance to build and protect their fortunes. A lot of y'all are not aware that wealthy people use life insurance to grow their wealth. A lot of you have heard that people use life insurance just to be able to pass over money to someone else when they die. But when you look at some of the wealthiest families in the world, they actually use life insurance policies to make investments while they're living. We don't have all night to talk about that tonight because tonight we're talking about real estate. But if you guys want to get in on that call, make sure that you tap the link. It's in the comments below. Okay, I'm gonna make sure that I put it in the description also, so that way y'all can check that out. Shout out to my brother Ian. Good to see you on, brother Ian. I just sent you an email a little bit earlier today. I was just talking about insurance earlier today with my brother Ian. He was actually one of my clients who actually has this wealth plan set up, okay? And so when we go back to this discussion about investing in real estate, you got to ask yourself, when is the right time, okay? I want to share with you this article once again because it was showing you that over the past 10 years, home prices have doubled. And when you look back at the chart, you will see how much housing prices have risen from year to year. Now, we're only going to look at one more part of this. I ain't going to keep y'all on here all night, but I just want y'all to be able to see this as also. Will home prices drop in 2023? It depends. There are indications that multi-decade trend could be showing signs of reversal in 2023. In other words, the housing market has constantly gone up. They're wondering if housing prices this year is going down. For starters, the S&P Case-Shiller U.S. National Home Price Index dropped by 2.5% since its peak in May. At the same time, the rate for a 30-year fixed mortgage increased from a low of 2.78% to 6.15. This is going to be something very important that we're going to talk about on tonight's show, guys. If you're going to invest in real estate, you need to be very aware of the interest rate and how that affects your mortgage payments. That makes all the difference when you're talking about should you invest at this time or not. Now, I just want to show you all this. Experts have different opinions about whether or not home prices will drop in 2023. Look at this. Goldman Sachs home price prediction projects a 7.6% drop. Wells Fargo forecasts home prices to fall by 5.5%. Realtor.com estimates 5.4% growth in home prices despite poor macroeconomic conditions, and NAR projects home prices expected to increase by 1.2%. NAR is the National Association of Realtors. So guys, there's a mixed audience on if the market goes up or not. So I wanted to do this video with you at the start of 2023 so you can be prepared no matter what happens. Tonight, I'm going to show you what to do if the housing market goes up and prices get higher. And I'm going to show you what to do if the housing market drops and some of the opportunities. Make sure that you take good notes. Don't say that your brother didn't try to put you on, man. I'm trying to help you all out. Okay. So let's talk about this. When is a good time to invest in real estate? The best time to buy is typically when prices are low in the housing market and when it's officially a buyer's market. Here's something that I want y'all to understand. When home prices go up, you want to pay really close attention to the interest rates in the market because the interest rates are still historically low. I know you guys are thinking, oh man, I wanted to buy a home when the interest rates were 0%. Not everybody can cash in on that, guys. Even with the interest rates where it's at today, it's still lower than the historical average. But if the interest rates keep going up, it might be more difficult to invest in a property. If the housing prices go up and the interest rates go up, buying property could be more difficult. But say home prices go down, well, you might be in a good opportunity to get your first property. It might be tempting to buy your first property even if interest rates get a little bit higher. Now, let me tell you guys this. When we talk about these interest rates, right, this is talking about the amount of interest that you're going to pay on your mortgage. This is so that you can finance your real estate investment. So say that you buy a multi-family home in a residential area. Unless you have all of the money to buy it outright, you're going to need financing. So when you go to a bank to get a mortgage, you're going to have to sign up for an interest rate on the loan. Right now, I'm seeing a lot of mortgages around a 5% interest rate. And one of the things that I always encourage is staying with a fixed rate mortgage. Some of y'all might get trapped into that adjustable rate mortgage, but this is how a lot of people lost their homes back in 2007. A lot of people lost homes because they didn't have a good mortgage set up in the first place. And as soon as the market went under, so did their house. You want to make sure that you lock in your rates. So no matter what happens in the market, your terms stay the same. If you have a higher interest rate, you're going to have a more expensive mortgage. If you have a lower interest rate, you'll have a more affordable mortgage. When I'm saying that you're going to have a more affordable mortgage, I'm saying that the mortgage payment every month is going to be lower. Typically, most people don't look at the price of a house. They look at what is the monthly payment. The monthly payment depends on the interest rate of the loan. So you got to pay close attention to where this market is going as it pertains to the interest rates. You probably heard about everything that's happening right now with the Federal Reserve. They're trying to raise interest rates so that way they could slow inflation down. For any of y'all that don't know what I'm talking about right now, and it sounds like I'm talking Chinese, you need to make sure that you go back and watch the videos that I did before, where I was talking about inflation, hyperinflation, and the Federal Reserve. You need to watch those videos because it breaks it down from start to finish. The only thing that I want y'all to know for right now is the best time to buy real estate is typically when prices are low and it's a buyer's market. A buyer's market is when it benefits the buyer to buy. Over the past couple years, guys, it's been a seller's market. You've had so many people trying to buy properties that the sellers were jacking the prices up. I remember seeing people buying homes for $50,000 past the asking price, $100,000 past the asking price. It was a seller's market. With the demand being so high and the inventory on homes being so low, the sellers made out like a bandit. But what I want you guys to realize is that things are slowing down. So even though home prices got higher through inflation, the best time to typically invest in real estate is during a recession or a period of slow economic growth. You want to be on the lookout for that in 2023. 2023 is predicted to be a time where there's either going to be a recession or a period of slow economic growth. We'll see. Make sure to write this down. It makes sense to buy real estate during a recession if you have a long-term investing strategy. The reason why you need a long-term investing strategy when you're investing during a recession is because you need to play the long game to get a return on your investment. Keep in mind, prices are going down. So if you're in and out, you're not going to make good money on your investment. You need to buy low and sell high. So you're going to have to wait. The best time to buy real estate in a recession is when you, as the investor, have a long-term investment strategy and you're comfortable taking calculated risks. Remember, guys, during a recession, the property values may decrease, but we don't know where the market is going. All investments come with risks, but the upside is when property values go down, that gives you an opportunity to buy at a lower price. You'll have access to certain deals that you might never see again. So when you buy during a recession, there's probably going to be fewer buyers in the market because everybody's getting hit. See, this is the reason why more millionaires are made during a recession than any other time in the economy. The reason is because this is when rich people capitalize on a down market so they can buy everything on sale. You got to stay ready so you don't have to get ready, guys. That's what I'm saying. You got to make sure that when the next recession comes, you've already got your money set aside to be able to make the right investments. If you don't have any money, but you want to invest, this is the reason why there's going to be fewer buyers in the market. If it's not a recession, people are spending money. During a recession, that's when spending is cut back. So there's going to be more homes available during that time for you to be able to choose from. There's going to be less competition. I don't know how many of y'all have tried to buy a home over these past 2 years, but getting into a property has been hard as hell. Anytime you look for a house, it's going to be 4 or 5 people trying to buy that same house. They're trying to go well over the asking price. It was a nightmare. But during a recession, this is when you can make disrespectful offers. What's a disrespectful offer? A disrespectful offer is somebody has the house on the market at a certain price. You go under at a disrespectful discount because you know they don't have a lot of people buying. You know that if they don't take your offer, they might be stuck with the house. And people are looking to sell. So this is a golden opportunity if your financial situation is in the right place. Now, during a recession, this is when the interest rates are likely to get lower. I want y'all to pay attention to this. See, if you're trying to create generational wealth, guys, I need y'all to know these terms. My job is to take these terms and make them as simple as possible so that we can understand. When the market talks about the interest rates, you need to know what's going on with the Federal Reserve. The Federal Reserve has been trying to slow inflation down and stop spending. So they've been raising the interest rates in the market so that the economy will cool down. Now, whenever the interest rates rise, that's when spending stops. But it gets to a point where when spending stops, a recession begins to come. When the recession comes, because with the recession, people could lose their jobs. People cut back on spending. People can't afford a lot of different expenses. During a recession, that's typically when the Federal Reserve likes to make things a little bit lower on the interest rates so that way they could get spending back to a healthy level. If you watch my content for the past 2 years, you know I've been talking about this almost every video. Inflation has gone so high after the stimulus checks from the vid a few years ago, if you know, you know, that America's economy has been trying to rebound ever since. But if the interest rates go back down, that makes the mortgage payments more affordable. As long as the interest rates are going up, that means that the mortgage payments are going to be higher. This is what you have to know about the recession. If y'all got any questions, please make sure that y'all leave me a comment. Oh, shout out to my brother Mala Walaki, man. Shout out to my brother Akaman. It's so good to see you on. Peace and love to you, my brother. Peace and blessings. So happy to see you on as always. Shabu TV said it's better to know what not to do than what to do. That last live stream was good. I'm glad that you enjoyed it, family. For those of y'all are on, please make sure that y'all smash that like button. Tonight, we're talking about should you invest in real estate in 2023? I'm breaking down when is a good time to buy, when is not a good time to buy, and what are the best and worst types of real estate investments to make during a recession. If you guys are getting a lot of value, please show me some love. Tap that dollar icon in below the comments, that little dollar box, y'all. Y'all see it on y'all screen. That's for your super chat, okay? Your donation keeps this channel going. Now, when we talk about a recession, because that's what they're saying is on the way, there's some particular kind of investments that you want to look out for during this time. Did you know that during a recession, Some real estate investments are better than others. Let me give you an example. During a recession, one type of real estate investment that could outperform others is the purchase of a distressed property. A distressed property is a property that's in need of a repair or that's been foreclosed. You want to buy distressed assets during a down market. This is where things are on a deep discount. Have y'all ever gone to the store and you saw something that was priced so low you thought it had the wrong price tag on it? That's what a distressed property is. This is a once in a lifetime opportunity for you to get a property that you never thought that you could get. You could buy it at a deep discount and it could have the potential for a very good return after you make renovations and repairs. Another kind of investment that would be very good for you guys to look into is multifamily properties. Why am I saying this? Because if you can buy a multifamily property during a recession, even if your money slows up in other areas because you got hit by the recession, you're still able to generate recurring income through other people's money. I want y'all to think about that. How many of you guys right now are working at a 9-to-5 job? That's one stream of income. Let's say that you buy a triplex. Now you have 4 different avenues of income. Your 9-to-5 job plus 3 checks from tenants. This is when you want to increase your safety during hard times. Because if there's a recession, well, if you lose your job and you have no other streams of income, you're done. But if you have a multifamily property, now there's a good chance that at least 1 or 2 people out of that 3-unit property will still be able to maintain the cost of rent. This is giving you protection for you and your family to create generational wealth. I'm giving y'all the game, man. What's there not to like? This is how you come up during a recession. This is the reason why rich people like Warren Buffett, they always hold a lot of cash until the market goes down. They always want to wait until there's distressed properties on the market so they can buy it at a very low price. And guys, the thing that I want y'all to realize is this is the reason why you have to have a long-term mindset. This is not a get rich quick scheme. This is a long game. When we talk about buying distressed properties, you can't just make a repair on it today and then just flip it tomorrow, not in a recession. You might not even have the money to do the repairs and the renovations now, but you have enough money to buy the distressed property while you can. So you got to make these improvements along the way. We talked about distressed properties. We talked about multifamily properties. We also need to talk about commercial properties. Have you ever considered investing in a commercial property? Because during a recession, businesses might give you a better chance to make money than the average person. Have you thought about that? Have you thought about if you were able to buy a commercial property that was leased to an essential business? Those kind of businesses are the ones where even during a recession, they're still making money. What if you bought a commercial property that was leased out to a government entity? Well, we know that the government always prints money. So if anybody's going to be able to protect you, surely it's going to be those commercial real estate investments. You're going to get financial protection when you put it towards places that come with guarantees. If you're doing business with the government, that money is coming in guaranteed. Okay. So I just want y'all to think about this when you think about what are the right types of real estate investments to make during a recession. I don't want you guys to just be thinking broad. Okay, just invest in any real estate. during a recession. No, this is where people go wrong. Just because it's a recession doesn't mean that there's opportunities across the board. There's opportunities that are pronounced in certain places, and you've got to know where to find them. The next opportunity that I want to speak about is self-storage locations or mobile home parks. I just want y'all to know, man, y'all getting a lot of free game. I just want y'all to know that. Maybe you know that already. I don't know. But do you know the kind of network you would need of real estate investors to give you this game of, hey, during a recession, don't go over here where everybody's looking to buy this kind of property. No, that's where people take L's. Go and buy this property over here. Most people, they don't even think about these types of properties that I'm telling y'all. It's a less crowded market. So when you think about self-storage, it's all about hedging your bet. Rather than you just buy a single family home and you're depending on one person to come through. Well, if you own a storage facility, you have tons of customers that's giving monthly checks. If you have a mobile home park, you have tons of clients paying you every month. During a recession, you want secure funding. You want to make sure that you're buying assets that also come with a greater opportunity. You're still taking risks, but it gives you a lot better reward. Why? Because there's a much better chance that somebody's going to be renting a property on a self-storage unit than you just buying a property where like buying a brand new home. Ain't nobody even lived in it yet, and you're just hoping that somebody is going to rent your home during a recession. I'm telling you, that's risky. You got to know how to take calculated risk. And I want y'all to know something else. Everything that I'm telling y'all right now is a general message. I don't know what state that you're living in. You got to think about the market conditions where you are. Real estate depends on the city and the state of where you're making your purchase. Some of y'all are tuning in from California. Some of y'all are tuning in from Louisiana. Some of y'all are tuning in from New York. Every housing market is different. I need y'all to do your research at a local level and then make the best decision. Let's talk about when does it not make sense to buy real estate in a recession. I know that you think, oh man, it's a recession. Anybody that got money, they're going to come up. No, don't let them lie to you. There are certain investments you don't want to make during a recession. And I just want y'all to realize it doesn't make sense for a person to buy a real estate investment during a recession if they're going into it with a short-term strategy. Why doesn't it make sense to make a real estate investment if you're thinking short term? Because the market is down. And in a recession, the expectation is that the market is going to keep going down. See, what you're trying to do is you're trying to ride the wave. So when the market is going down, there's no guarantee of when the market is going to bottom. You can't time the market. So you're just going in, hoping that you're going in at a good time, but eventually the market is going to come back up. That's not going to happen overnight. I know a lot of y'all probably lost money in the stock market last year. It's going to take some time for the market to recover. It's not an overnight process. So during a recession, when property values decrease, it's not guaranteed that the property will appreciate in value in the short term. This is a long game. Another thing that you want to keep in mind during the recession is that your finances might be a little bit more shaky. Unemployment typically goes up and the economy gets weaker. So for the average person, it becomes harder to secure financing during a recession. The banks are not even as likely to give you money. So you want to make sure that when you make a real estate investment, you're put in a solid situation first. What do I mean when I say a solid situation? Guys, I don't want you trying to kill yourself to invest in real estate if you don't have your finances together. I don't want nobody to walk away from this podcast saying, Uzziah said, I got to cut off my arm and I got to give it to the bank so that way they'll let me get a $100,000 loan. No, I didn't. Don't lie on me. I'm telling you right now, don't get so caught up into the hype of investing in real estate that you put the cart before the horse. You got to make sure that you structure your finances properly so that way you can be in the right position to make the right moves. Guys, I'm going to tell y'all something. The reason why the rich get richer is because they focus on positioning. They focus on what is the move that they need to make today so that way they can have a better tomorrow. So when the economic boom comes, they're already ready. The rest of us, we're playing catch up. We're constantly trying to make up for our mistakes so that we could finally get in the game. Make sure that you get your financial situation together. Here are a few things that you want to consider before becoming a real estate investor. Number one, you want to make sure that you have an emergency fund. 3 to 6 months worth of living expenses saved up in case of an emergency. Guys, I know the thought of owning an investment property sounds sexy, but I promise you it's work. Last year, I spent more money on repairs for my investment property than I ever have the entire time that I've owned that property. Oh, and it was expensive. We're talking about fixing broken ACs in the summer. We're talking about busted pipes in the winter. All of those things you have to cover. And that's on top of your cost of living. So not only do you got to take care of the things in your house where you stay, but you have to take care of another property somewhere else. This is why you need to have your money together. And that's why I always recommend for starters, one of the best ways to get into the real estate game, guys, is for you to buy a multifamily property where you live in one unit and rent out the other. The reason I accumulated over $1 million worth of assets in real estate is because at a very young age, when I was 25, I bought my first property. I lived in one unit. I rented out the other. Every month I had been getting rental checks. And with appreciation and the money gained from the rental, I then bought another property and continued building from there. You have to know how to play this game. But I promise you, if I didn't have enough money in savings to fix a repair at a moment's notice, it all would have come crashing down. You never know when something is going to break. And the last thing that you want to do is give your tenants some excuse about why you can't fix their broken appliance right when it's breaking down. You do that, you're going to be out of a tenant, and then you're going to be left holding the bill for paying the mortgage every month. Make sure that you have your emergency fund in place. Let me check these comments real quick. Shout out to my brother Ian for the $3 super sticker. Definitely appreciate that, King. Definitely appreciate all the love and the support. Yes, my brother Ak. I have been very busy, Ak. I have been, my brother. It's good to see you, though, man. Just been taking care of a lot of things for the church. You know how it is, but trying to get back on it. I've been having a lot of brothers and sisters, even as a part of my church, asking me, hey, man, when are you going to get back on the show? I was learning so much, and it was helping me out. I'm just trying to do my thing, all right? So for those of y'all that are just now joining, make sure that you smash that like button. Tonight, we're talking about, should you invest in real estate in 2023? I'm giving you a step-by-step guide on which kind of properties to avoid during a recession. I also told y'all which kind of properties you should consider during a recession because there's some properties that give better returns than others. During a recession, you need to have a long-term mindset. You need to have your finances in order. You need to have your emergency fund. You need to have a low debt to income ratio. Listen to me. If you guys are loaded in debt, it's going to be very hard to get a loan from the bank. When recessions come, that's when they're tightening all of the spending. That's when they're taking dollars out of the market. So when the banks are taking money out of the market, you know what else they're doing? They're tightening up on the number of loans given out. They're raising the interest rates, and it becomes harder for the average person to qualify. So you need to make sure that if you're going to capitalize on real estate investing during a recession, you need to be the best of the best financially. How do you do that? Go to the bank, show that you have emergency funds in place. They're going to ask about it. During underwriting, they're going to check your debt to income ratio. If your debt to income ratio is high, you're going to be the first one getting a denial. But if you have a debt to income ratio that's low, that's going to tell the bank, hey, we could count on this person. They've gotten rid of all of their debts. They know how to manage credit. And now we're going to entrust them with this money. Speaking of credit, making sure that you have a good credit score. So what's the difference between having a good credit score versus a low debt to income ratio? A low debt to income ratio means that you have a minimal amount of debt relative to your income. You make this much, you owe this little. Good credit is where you have a good FICO score. What's your credit score? 700. Let's get that number up. I want all of my generational wealth podcasters to strive for a credit score of 800 plus. Yes, I said it. I want all of y'all to strive for having perfect credit. Your credit is extremely important. And y'all, I haven't talked about this yet, but maybe I will sometime this year. Your credit score is going to be more important than ever because there's going to be regulations that will change over time. And there's going to be some things that's going to happen that's going to get kind of scary, where if you don't have good credit, they're going to deny you a lot of stuff. So just make sure that you start getting that on point, y'all. I don't know how many of y'all know this. I'd actually put together a program over the past couple years called Build Your Credit Video Vault. It was a part of my 0 to 6 figure masterclass. For those of y'all that didn't check out the free webinar, maybe I'll put the link on in the description as well. So that way y'all can check out the free webinar and you can learn more about how to raise your credit from there. Also, make sure that you go back and watch some of the videos that I've done on this YouTube channel about building your credit. A lot of knowledge, a lot of gems. When you have a higher credit score, you can qualify for a loan with a lower interest rate. Remember, during a recession, the interest rates could get low. You want to make sure that you get the lowest interest rate possible and lock it at a fixed rate mortgage. Listen, guys, I can't tell y'all what to do. I'm not a financial advisor that's licensed. This is purely educational. But what I can tell you is, as someone who's owned over $1 million worth of real estate and that paid off over $100,000 in student loans when I was 23 years old, I can tell you that having good credit makes a world of difference. I would have never been able to get my first real estate property in North Austin had I not had good credit. There was been no way that they would have let a 25-year-old young black kid from South Central Los Angeles get some type of a duplex in a Austin suburb had I not did what I needed to do to raise and improve my credit. Your credit might not be where you want it to be now, but keep working it up one day at a time. This is how you create generational wealth. The next thing that we got to talk about when we talk about generational wealth is income stability. If you want to invest in real estate in 2023, you need to make sure that if a recession comes, you can show solid proof of income stability. Banks are going to be very focused on the stability of your income during a market crash. Think about this, guys. If you're working at a job right now and you just started a month ago, banks are going to frown on that because they're going to say, hey, how do we know that this person is going to survive this recession? But if you've been working at the same job, let's say for the past 5 to 10 years, now the banks will look at that and say, okay, you know what? This person has a pretty good shot at staying on board. You want to show longevity. You want to show a solid track record of making good financial decisions over time. And I know for all of my job hoppers out there, you might not stay at a company for 10 years. You might bounce from one company every 2 to 3 years, and that's all good. Because in your case, the main thing that you want to prove is that there were no long periods where you were unemployed. And every time that you went from one job to the next, your income remained stable and high. I'm not talking about y'all that can't keep no job and you getting fired every 3 to 6 months. That's not who I'm talking about right now. Y'all don't got that income stability. I'm talking about the folks who are strategically moving from one corporation to the next, so that way they could get promoted from everywhere they go. Okay, there's a way that you play this game, guys. And that's one of the things that I've talked about as well on this channel. Make sure that you go to my playlist on my YouTube homepage about how to get a better job. I break down how you can get a better job in 90 days as long as you know how to play the game. We talked about income stability. A couple of the other things that I want to tell you guys about is making sure that you have the right investment capital, making sure that you got money to cover your down payment, your closing costs. If you have money that you want to set aside for repairs and renovations, you want to make sure that you have enough liquid capital to cover your expenses. They do have these promotions every now and then, zero money down, but you want to make sure that you have money set aside just in case of any emergencies. The banks are going to look at you and smile if they see that you're bringing money to the table. But if you come to the table, no money, bad credit, no long-term job history, chances are you're going to be denied, because during a recession, they're not giving out loans. They're tightening back. That's why they're stopping spending. The next thing that I really encourage you guys to have, I really encourage you guys to have a lot of investing knowledge. See, this is something that you don't need any money for, not for the knowledge. I want to make sure that you soak up enough game on how the real estate market works. I want you to learn about property management during this time. So right now you might be saying, man, I don't even know if I should watch this video, Uzziah, because I don't have no money. I damn sure don't have no money to be putting towards no real estate properties. I don't have it like that. I want you to think ahead. This is not about whether or not you have the money. This is about whether or not you have the know-how on what to do with the money when you get it so you can buy a property. A lot of people have the money and don't know what to do with it. You hear about athletes, celebrities losing millions of dollars all the time. This is about you gaining knowledge. That's what the Generational Wealth podcast is all about. So it doesn't matter if you're rich or poor. It doesn't matter if you're just starting on a journey or you got 100 properties. These are all things that you can benefit right now because it's all right here. And fortunately, you didn't have to pay $1 to get it. If y'all appreciate that, smash the like button. And if you do get enough value from this to where you say, man, you know what? This is something that most people would have had to pay for. If you want to sponsor this channel, please do me a favor and tap that dollar icon directly below. Your sponsorship goes a very long way. Also, for those of you that like using Cash App, $Gen Wealth Podcast. Y'all see the information is scrolling at the bottom of the screen. You could donate through Cash App or PayPal. Leave me a comment and let me know if you donate through Cash App or PayPal during the show, so that way I can shout you out, because I have no way of knowing if you've made a Cash App or PayPal donation during the show while I'm looking on the screen. Okay, so I'm looking at a lot of these comments. Brother Ian says he been worked to death at at Amazon recently. I'm sorry to hear that, my brother. Okay, hey, you might want to think about investing in some real estate. Okay, it's not always pie in the sky, but you guys want to make sure that you start building passive income. You know, the average millionaire has 7 different streams of income, and as you could see, I'm always investing in real estate. I own property in Texas. I also am a business owner. I own my own online business. Y'all can see I got my book right behind me as a best-selling author. You want to have multiple streams of income so that during a downtime, if you lost your money in any one stream of income, you would still have some kind of protection coming from somewhere else. This is just making sure that you have protection for you and your family, guys. This ain't about obsessing about money. This is not even about the love of money. This is making sure that if you're living in a country where inflation has gone through the roof, you are not denying your responsibilities as a provider for your house. When you read the Bible, it says, if a man does not provide for his own, even that of his own house, he's denied the faith and is worse than an infidel. So if you're not consciously doing something to provide, hey, you got to answer to God on that one. Maybe God sends somebody to you to help give you some gems. Investment knowledge. You got to have the knowledge on how to play this game, guys. Do not go into real estate investing blindly. Please don't do that. You know, if you had a family member that died and left you a large sum of money, please do not just throw the money in the sky, not knowing what to do with it. You need to make sure that you know this process, okay? So make sure that you come back and watch this video again, just so that way you could soak it all in, okay? You might not learn it all this one time, but now it's just giving you the foundation so that you can build and grow in the future. I also want to point out, real estate investing is not for everyone. It's important for you to realize it's not just as simple as buying a property. You also got to maintain it. That's a time-consuming task. Unless you already got property managers and money set aside to handle those expenses, you're going to have to know how to deal with tenants. You're going to have to know how to handle repairs. You guys are going to have to put in work. Might not be as much work as Brother Ian is talking about, where Amazon is working them to death, but it's going to be some work all the same. And with that, I thank you so much, my brother Kanan, for you sharing with me your hard-earned labor and helping with the sponsorship. Thank you so much, my brother, for the Canadian bucks on that 50 Canadian bucks super sticker. Let's give our brother a hand. Thank you so much, man. Really appreciate you, my brother. For those of y'all that are just tapping in, tonight we're talking about, should you invest in real estate in 2023? And right now, our brother Kanan, he just set the lead in being a official sponsor for tonight's podcast. Oh, look at my brother Rick. I meant to tell you that, Rick. The brother said, "You back?" Shalom, what it do? What's going on, my brother? It's so good to see you on as always, King. Hey, man, we trying to get back in this game, man. Y'all know how we do it. You know what they say, man. You can't keep a brother down. So, hey, we're doing the ministry. We also doing the show, trying to balance it all. I really appreciate your support. So once again, Kanan, I thank you, brother. That really means a lot, man. I appreciate that. This is definitely something that I don't take lightly. I thank you so much for all the love, my brother. Peace and blessings to you and your house, okay? So let's talk about this. If someone is looking to invest in real estate, they need to know that it's going to be a process. Don't be intimidated. You can do it. If I can do it, so can you. But if you're looking for a quick return on your money, investing during a recession is not the time. The market is going down. This is not the time to be thinking about no quick ROI. Nor is this the time for you to make an investment if you don't have a stable financial situation, guys. Okay. I don't want you to put the cart before the horse. I want you guys to go into this thing correct so that way you have a foundation to build on from year to year. And like I keep saying, real estate investing depends on you as the individual investor. So you got to know what your finances look like, and you got to do your research on the cities that you're looking to invest in, because every city is a little bit different. Okay. I'm out here in the countryside. The real estate market works a lot different where I'm at now versus if I'm in Austin. I've got a property in Austin, and the way that housing market flows is totally different than how the housing market flows here. You've got to know the game. This is the reason why you got to build your network too, guys. Wherever you plan on investing in real estate, you need to know real estate agents in that city. You need to get familiar with people who are investing in properties so they can let you know the ins and outs of how that market is played. Let me give you all an example. Right now, I live in a very small town that's filled with entrepreneurs. And the thing that the entrepreneurs here know is the type of land that's being built on the other side of the town. Talking about big corporations, how it's going to raise the property value, the market projections for where this housing market is going to go in our local town over the next 3 to 5 years. I might be outside taking out the trash, and it might be one of my entrepreneur neighbors telling me about what's going on this property, what major company is coming down the street. You want to make sure that you build a network of people that are giving you the game of how real estate is played in your area, so that way you can make wise decisions, okay? You want to make sure that you got an inside scoop. Also, let me point this out as well. This is very important. Y'all ready for this? What are the worst kinds of real estate investment purchases that you can make during a recession? Remember, I showed y'all the best kinds of real estate investments that you could make during a recession. Now I want to tell you about the worst kinds of investments, because not all investments are the same. During a recession, some investments that may perform worse than others are luxury properties. If you're looking at luxury properties like a vacation home or something high end, there's going to be a much steeper decline on people that are looking to rent those homes out. I don't know if y'all know this, but a lot of people that own Airbnb properties, they're taking a hit because spending has slowed down. Couple years ago, everybody and their mama was trying to be an Airbnb owner. Y'all heard about it. But now, as the economy is slowing down, one of the first things that gets cut out is travel. If nobody is traveling, nobody is coming to stay at your vacation home. So you really want to think about that before you make those kinds of purchases. You also want to think about new construction. New construction projects could be put on hold during a recession. The reason why it could be put on hold is because ain't nobody buying nothing. During a recession, that's when unemployment rises. So the people that's working on building a home might be out of jobs. This is going to decrease the demand. You don't want to be stuck on some new build of construction in the height of a recession. You also want to be careful when it comes to buying raw land. Guys, if you have raw land that you've purchased, it won't appreciate in value much during a recession. Okay. You got to always consider during a recession, that's when the market is going down overall. So if you have raw land that doesn't have any inherent value built on it, that's going to be a hard time. Lastly, remember flipping. You know how everybody talks about flipping homes? A recession is not the ideal time to flip homes. Now, a couple years ago, maybe even a year ago, oh man, you could have made it cold flipping homes, because for everybody that was buying a home, you had 10 other people coming behind them looking to buy the same house at a higher price. So when the market is going up with inflation, it's good when you can buy a home, repair it, resell it, and then you can capitalize on the demand of the market. But if nobody is spending, you could buy a home and you could put a lot of money into it, and it might be harder to sell than you think. Guys, I'm going to tell y'all something. When I bought my latest property, every home that I was looking for had at least 5 people doing bids, 5 people bidding on the same property all at once. In this same neighborhood, community, there's a difference between neighborhood and community, so I gotta keep it correct on that. A lot of us that come from the hood, we know what a hood look like. This is a community. In this subdivision, if somebody built a home in this subdivision last year, oh, best believe at the start of the year, soon as that home was up, had the for sale sign on it, it was coming right down, already sold. But at the start of this year, I watched a home sit on the market for months before it got sold. And you know the reason why that was so scary? Because the person that built the property felt like, man, I can't lose. Every time I'm building a home, the money is flowing. And that was the first time that they had ever built a property where the home just sat there for a while. And that caused financial problems. So if you're just thinking, oh man, I'm going to just flip my way into real estate all the time, it doesn't work all the time. Not unless you're an expert, not unless you really know your stuff. You study the market, you know exactly how to go in, go out at a particular time. You already got buyers on demand. Unless you're at the top 1% of that niche, you want to avoid flipping homes in the heart of a recession. Wait for the market to recover and demand to increase before you go into that industry. And I know for a lot of y'all, just that one point right there saved y'all a lot of headache, because a lot of times when y'all go into real estate investing, the first thing that y'all think about is doing market flips. Okay. So as we close this show out, I want y'all to know something. It's important to keep in mind that real estate depends on where you are. Okay. Nobody knows exactly what's going on in your area. That's your job to research your local market to make the best decisions possible. Nobody knows exactly what's going to happen with the economy. You had Goldman Sachs saying the housing market is going to drop by this much. And you had other associations like the National Realtor Association saying that the housing market was going to go up. It could go up or it could go down. The reason why I did this video now is so that way we would have enough time to get prepared for either option. If the market goes up, you're prepared. I gave you a strategy. If the market goes down, you could be prepared. I've given you a strategy. Just watch the video again and set up your game plan for whichever way that you want to go. Make sure that you have your finances in order. Make sure that you have good credit. And make sure that you get any consulting work that you need done before you make any decisions. Okay, guys? So for those of y'all that want to tap in with me, just in case any of y'all are looking to cam up, please feel free to click this link. Okay, for those of y'all that want to get on the camera, I ain't seen my brother Yasha Allah yet. Can somebody give my brother Yasha Allah the memo? The Generational Wealth Podcast is back in action. All right, I need to get my brother on camera. I don't know if Brother Rick is about that life. Brother Rick, if you're on, whoever wants to cam up, that's the link to be able to do so. If there's anything that you want to ask me about real estate investing, or if there's any questions that you have related to the topic, or even just your thoughts on where the market is going to go, I would love to be able to get your feedback, guys. Okay, so I'm gonna look at these comments. Ariel says, very good point about building a network. I definitely need to work on that. Hey, Ariel, you know what time it is. Your network is your net worth. Okay, so that's something that's very important for us all to think about. So, guys, no matter what your situation is, you just got to start from where you are. Don't watch this podcast and think, oh man, this is only talking about the people that are filthy rich. Those are the only ones that could do anything with their life. No, I didn't start off filthy rich, guys. I didn't start off with no money to be able to invest in real estate. I came from South Central. And if I can do it, so can you. You just got to apply yourself. Don't psych yourself out, man. Don't tell yourself what you can't do without even trying, guys. You got all of these people out here. They're no more smarter than you. They don't work no harder than you. They're just putting their energy in the right place. So for those of you guys that checked out my video last Monday, okay, I did this, like I told y'all, I'm trying to get back to doing the shows Mondays, Wednesdays, and Fridays. I'm trying to do these podcasts Mondays and Wednesdays, 6:30 p.m. Central. As you can see right now, I'm 2 for 2 for that 6:30 p.m. Central time. Y'all pray for me so we can keep it rolling. When we do the Friday podcast, Lord willing, I'm going to do that one a little bit earlier. I'm going to try to go for 4 p.m. Central. So just make sure to mark your calendars. And if y'all have seen it, I've put the scheduled post on YouTube. So that way you'll know what time I'm coming on. But the reason why I'm sharing all of this with y'all is because Shabu TV, he had made a quote about something that I said on my Monday podcast. If y'all saw that, about how to dominate 2023. I said in that episode, it's better to know what not to do than to know what to do. And the reason why I said that is because 2023 is only about how you manage your time. And it's more important for you to identify what things you're not going to do over the next 12 months and stick to that than think about all the things that you have to do and feeling intimidated. For a lot of you guys, keep it a buck. Your life would change just if you stop doing the things that you know that you shouldn't be doing. You don't even got to transform yourself into somebody that's doing a trillion new things. Just stop the 3 bad things that's holding you back in life. And then you're going to make progress by default. I told you guys in that session that I'm looking to work with y'all this year. And that's the reason why I'm opening up my 12-month coaching program called Your Breakthrough Year. For those of you that were on my Monday podcast, you saw one of my students, A Diamond, tell you that I shouldn't even call the program Your Breakthrough Year. I should call it Your Breakthrough Life. Now, some of y'all know my story. You know that I've been working with over 100 clients for years. And many of you have seen and heard all of the testimonies about people who have gone through the Breakthrough Year program that paid off tens of thousands of dollars in debt, started their own businesses, got out of their 9-to-5 jobs. The Breakthrough Year is an elite 12-month experience that's designed to help you reach your goals, make more money, and maximize your productivity. So when you join the program, you're going to get a step-by-step process on how to reach your biggest goals 10 times faster. Last Monday, we talked about the different types of goals that you should have, whether it's spiritual goals, physical goals, financial goals, they all come together. You need to know how to hit your goals as quickly as you can. So if you want to know how to have your best year ever, even if you're feeling stuck and don't know how to move forward, you really need to join, because I'm telling you, in that program, I'm giving you guys the secret breakdown of how the most successful people in the world maximize their time, energy, and money to have world-class performance. Some of you guys may not know my professional background. When I was 23 years old, I paid off over $100,000 in student loans after graduating from Baylor University. I worked for 6 years in corporate America at Hewlett-Packard, which was the largest technology company in the world at the time, as a PMP certified IT project manager, campus recruitment manager, and president of HP Austin's Black Employee Network. After I paid off my student loans, I created my own financial education company, the Urban Money Movement. After a number of years, I transitioned out of corporate America and retired and did my own business full time. In my 20s, I bought my own real estate property in North Austin, paid off that $100,000 in debt, became a best-selling author. These are things that I'm sharing with you, not to talk about myself, but to show you I'm outlining how I did that in the program. If you guys want to know how people like Elon Musk are able to accomplish more in a week than most people are able to accomplish in a lifetime, you need to join your Breakthrough Year, because you need to understand every high performance person is going about managing their life differently. They've got the same 24 hours in a day as you, but they're doing totally different things. So if this is going to be your Breakthrough Year, I'm going to give you the link to join, okay? And as always, y'all know how we do it. All of my programs come with guarantees. So all you got to do is check that out, and feel free to reach out and send me a message, guys, okay? So for those of you that joined, thank you so much for all of the support. Just in case you haven't done so already, make sure that you smash that like button, okay? I would really appreciate you guys doing that. I know that you might think, oh, it's just a like button, no big deal, but it would really mean a lot to me, because when you smash the like button, that tells YouTube to help this channel grow. You know the type of content that I put into these shows, guys, okay? The type of free content that I give out to you guys, most people charge for that. And so I really would ask for your help. If you appreciate the value that you get out of this channel, make sure that you smash that like button. It only takes 2 seconds. It costs you nothing, but it goes a really long way towards growing this channel. I love you. I appreciate you. Please make sure that you subscribe and turn on that notification bell. And let's all give a round of applause to our official sponsor for tonight's podcast, my brother, Kanan Israel. Thank you so much, man, for those Canuck bucks. Really appreciate that. Really, really, really appreciate that, man. It really, really means a lot, King. All right. So until next time, y'all, make sure that y'all tune in, hopefully this Friday, because we're going to be talking a lot more about the upcoming recession, if that's to come. okay? And how you can prepare you and your household. Let's stay focused, y'all. Let's continue to pray for each other. And until next time, keep pushing. Let's keep getting after generational wealth.